Welcome back, everyone, to Profluence Sports. Another great podcast today with my man Adam. And we've been on a capital streak lately, so appreciate you keeping it rolling, Adam, and excited to dive into a little bit more of the early stage side. We've had a lot of these big PE funds, but a lot of these companies don't reach that stage if it's not for people like yourself. So excited to dive into this one today.
Absolutely. Thanks for having me. Excited to be a part of it.
So I guess just real quick, give us 1 minute, 2 minute background overview of yourself, how you ultimately got into the venture side and then also the sports side, and then we'll take it from there and start to dive deeper.
Yeah, cool. So I actually started my career in sports. In a past life, I thought I wanted to be a college basketball coach. It didn't last very long, but worked at University of Georgia and
Me
Jackson
too.
University.
Not Georgia, but I thought, Coach, I did 1 year as well. Sorry, go ahead.
Yeah, no, it's the same, right? It's you realize you can't play, but you love sports, and so the next best thing is coaching. And so I always loved sports, had a passion for it. Again, wanted to make a career out of it. Didn't necessarily know how to make that work. But long story short, a friend of mine from college had an idea for a startup in the influencer marketing space. It was a company called Insightpool, and that brought me to Atlanta as I helped co-found and was part of the early team there. We ended up scaling Insightpool nicely to an eventual exit. It was during that journey that I met my now business partner, Andrew Steinberg, which we would eventually launch Phoenix Capital Ventures. So I spent a lot of time in the early stages helping grow from 0 to 1. I was at the predecessor to Prize Picks, a company called Side Prize. And then I spent a number of years, which got me more on the venture side in an organization called Endeavor, which was a network and fund for growth stage founders and their companies. We launched the Atlanta office in 2017. But it was during that journey, as I mentioned, I met Andrew. And we just saw this interesting void in the market in sports and gaming and media. And this was starting in 2016 when we launched, where there wasn't, to your point, a lot of early stage institutional capital. A lot of the capital was strategic in nature, as they were either high net worth individuals, sold the company, worked in the industry, and were angel investing, but not a lot of funds were coming in. And we saw money flowing into the space at the later stages, to your point, private equity, growth equity, Series B, D, B, C, and D, but not a lot on the early stage technology side. And so we just saw this interesting gap and decided to launch Phoenix Capital Ventures in 2016. Had a good run there, and then raised a current fund we're operating out of in 2021. And again, have had a lot of great companies, a lot of great success, and hopefully we keep rolling.
Yes, sir. Name of the game. There's a few different directions going, and I want to get to both. But I think for just the flow of this conversation, I want to start here. Founder versus investor, right? You sat on both sides now. How do you see it from both lenses? What, obviously being on both sides helps you understand the other side better and make moves. But I guess a lot of people have not sat on the investor side. For the founder side, what have you learned about being on the other side of the table so far for, almost a decade now?
Sure. There's a lot you don't realize on both sides of the equation, right? If you're only an investor, I think there's a level of empathy and understanding that working in early stage companies, being an operator, that you understand just from being in the in the seat, and vice versa, right? I think as a founder or early stage operator, you sometimes don't understand kind of the nuances of venture capital and what the expectations are from a general partner or anybody on the venture capital side. Just like a startup is raising capital from a VC, VCs are raising capital from LPs and have to answer to limited partners and their investors as well, right? And so I think there's just a general understanding working on both sides of the equation. But I think there is for me personally, there's something I learned that the best founders are so obsessed with a problem, right? And that's obviously what we're looking for when we're investing in companies. And unless you're so obsessed with a problem, it's very hard to operate and found something, right? And I totally respect those founders who do that because they're going all in. On the venture side, I personally love working with founders. I love working with a variety of companies. I love working in the industries that we invest in. But it's really interesting to me to have more of a portfolio and use different parts of my brain for different companies. And, again, it's just different. You're not pushing product all the time per se. And all right, some people love to be doing that and moving every single day, every single week forward. And that's where, being in a startup, being in the early stage makes a lot of sense. So I think a lot of it comes down to personality traits, what people are interested in. But for me, there's a general respect that I have for founders because it is the hardest thing in the world. You're going all in, you're committing your life to something. And it certainly doesn't go unnoticed. But again, I think now sitting in the seat of a venture capital GP, there's a lot you learn that you may not have understood otherwise, other than just raising capital from a VC firm. And I think
Yeah.
that's important also, by the way, for founders to understand, because if you look at deal mechanics and math and expectations and returning a fund, like all of these things, I think it is important. It's something that we talk to a lot with, whether it's founders we're doing diligence on or within our portfolio. There are expectations once you raise venture capital, right? They expect an exit eventually. They expect it to be outsized. And so understanding kind of where a venture capital firm is within that fund lifecycle, especially, is super important. Have they returned capital? Are they in the first year of their investment period, or are they in year 5 of their investment period? Like, I think there's a lot of nuances and questions that founders can be asking of their prospective VCs to get an understanding of kind of where they might fit in that landscape.
Yeah, I think it's a good overview. And I want to go deeper on one point. You talked about being obsessed. How do you get the feel for that? Or how do what gives you that inclination that a founder is obsessed about some certain problem, service, product, wherever it fits?
Yeah, I mean, the first is the fact that they recognize a problem, they go after it, right? Like, if there's a problem and it is annoying you enough to go build a product, like that in and of itself is really meaningful, right? And I think what we see when we're doing diligence is there's a cadence, there's a way the best founders respond when you ask them questions about their product, you ask them questions about their industry, they know it to a T. They are just obsessed with research, with competitors or no competitors and staying ahead, or, other successful founders, and they're voracious about, consuming content, podcasts, so on and so forth, right? Within their industry, outside their industry. It's a combination of being obsessed with the problem and being obsessed with building an elegant company, right? Because that's what you're doing at the end of the day. You can be as obsessed with the problem as you want, but you still got to execute. So trying to get under the skin a little bit of that founder and ask those questions, what do they do outside of work, I think is important, right? Like, there's a lot of things that we will dive into to try to figure that out. It's certainly not easy. We haven't always gotten it right, but it is important, because like I said already, it is so hard to build these companies. There's going to be tremendous highs and tremendous lows. And during those low periods, especially, like, if you're not obsessed with what you're solving, it's going to get tough and hard to fight through. And so it's, again, stuff we try to really sniff out. And especially during our diligence process, like, we know we're betting on the founder more times than we're betting on the company and the industry to some degree, right? The products change, companies change, industries change, regulation changes. But you know what? That founder has to stay steady and be able to kind of fight through all of that.
Yeah, and something else is from a little bit before, but 2016, obviously you had been on the sports side a little bit. Has your, I don't want to say overall thesis, but has your optimism, I guess is probably the right word here, stayed the same? 2016 was a much different time than 2025 in sports. How do you still feel about it from the early stage side and where you're deploying? And we'll get a little bit into your thesis and all the more boring mechanics that are still important. But, from an optimism standpoint, still the same as 2016, increased? Where is it at?
Yeah, I would say if anything, it's increased. I mean, you continue to see the announcements of these large billion-dollar plus funds in and around sports, gaming, media, entertainment, which is where we're investing, right? Whether it's, private equity looking to take positions in sports teams, or again, large buyout funds, again, just broadly speaking, investing around sports. I think it continues to validate what we have seen and what we are doing. The landscape has certainly changed. I think, there's a trickle down effect of that, and you referenced it when we started. I think our hope is that one day the companies we're funding at pre-seed and seed can eventually get to that stage, and there's that sloth of capital that can really continue to fund it. I also think, again, specific to sports, if you look at how these teams are changing, the ownership structures are changing. I mean, the adoption of technology is going to be so important, right? You have private equity coming in, they're going to expect, certain returns and certain ways you operate a business. And so the adoption of technology is going to be so strong that we believe it's still super early. And again, that's just on one end of the spectrum. I mean, again, when you get into entertainment and gaming and whatnot, I mean, that's a whole nother piece of this. But yeah, the interest in sport has never been stronger. You hear the $3 trillion asset class, thrown out there constantly, and it's true, and the interest is there, the appetite for investment, and I think it's going to take a lot of fast growing, high ambitious founders to tackle the problems that need to be solved within these organizations.
Great. And I think it's a good transition into PCV, Phoenix Capital Ventures. Obviously earlier stage side, we talked about where are you living, check size, the whole gambit. Where do you guys sit on that and allocation, the typical venture type stuff that's important for founders to understand, which I think not many do, but should.
Yeah, no, you're right. So yeah, PCV, we're an early stage, pre-seed and seed stage venture capital firm. We invest at the intersections of sports, gaming, media, and entertainment. We look and aim to be the first, if not one of the first institutional checks on a cap table. We love the 0 to 1 phase. We want to lean in and be supportive and helpful in whatever capacity that means, whether it's being a phone call at 11 o'clock at night when, a founder has an issue, or it's sourcing some talent or helping with business development. I mean, whatever that, whatever is necessary, we like to say, put us to work. We tell all of our founders that. So in terms of how we invest, we not only lead, we'll follow. I mean, it's fun because you have a lot of really interesting groups now in and around the industries that we invest in. And so, check sizes can be low six figures up to, $1 million in the current fund. As we go into the future and look to continue our own growth and around our fund, we will lead more, write bigger checks, look to have more ownership. But yeah, we love the early stage. We kind of know our lane. We love to stay in our lane, play that role, and then also help the companies, get to that next stage. So if we're at pre-seed, what are the things we need to do to get to that seed stage? If it's seed, how do we get to A? Or do we even need to raise capital? Do we need more? Do we need less? I think a lot of that we understand needs to be figured out at the early stage. There's a lot of, people asking for 5-year forecasts, just rip them up, right? Like the expectations change year over year, minute over minute, even. So, that's the lane we stay in. That's what we love to do, who we love to invest in. And so, yeah, anybody out there who's listening and interesting companies,
Yeah,
feel free to send them our way.
for sure. I think something, and this is, I haven't asked a lot of the other investors. It's just something I've been reading a little bit more lately. There was an example of, I believe it was Uber, but there was like two of the first investors, and one executed their pro ratas all the way through and one didn't. And the return outcome was drastically different. They both did well, but one was like one of the top returning funds of all time. And one was, just typical standard, did solid. How do you think about that as well? And what can founders understand also about that? And maybe even explain what it is for people that don't understand.
Sure. Yeah. The concept you're talking about is dilution, right? What ends up happening if you're going to raise subsequent rounds of capital out there, every round you raise more capital, the cap table gets diluted by, whatever percentage ownership you're selling in that round. And so for early stage investors, oftentimes we ask for what's called pro rata rights. So when we ask for that, it's not to be difficult. It's not to, really be a pain in the process. And it's more of just like, we want to be on the journey alongside those companies, right? We want to be in that 10 to 12 year journey with these companies at the pre-seed. And we want to be able to continue to write checks and keep our ownership, given the level of risk we're also taking at the earliest stages. And so, pro rata rights essentially give investors the right, not the obligation, but the right to maintain their ownership in every subsequent round of financing. So in that Uber example, they raised a boatload of capital. I don't remember what their last round was before they went public. But if both of those early investors had 10%, the one who is able to maintain their 10% throughout when they're a $50 billion company is obviously making a lot of money. The other one, if they're selling, 20% of their company every single round, that 10% is getting diluted every single round by 20%. And so what do they end up with? Maybe a point. So again, going back to some of the stuff I mentioned earlier, these are the things I think it's important for founders to understand how investors need, certain things or have certain expectations when they're investing, because they want to be along for that journey. They're backing you early. They want to be a part of it for the life cycle. But at the same time, our job is also to make money for our LPs. And so our best performing companies, we want to maintain our level of ownership, the returns and the fund math work out. And so that's a quick explanation, but it is important. Again, these are the things that it's not probably talked about often enough, but hopefully helps some founders understand just kind of what the expectations are.
No, it's great. And like switching a little more macro, what's getting you excited right now? And we'll go across your whole thesis: sports, media, entertainment, gaming. What's on your mind, or what are you thinking about? What's drawing the most enthusiasm of? There's a lot of things going on, so I'm curious, without leading you towards what I think is interesting, where your head's at.
Yeah, I'm going to flip that on you and ask you what you're most interested in. I think generally speaking, we're fairly opportunistic as investors, right? And we're thematic in the industries we invest in, but we're also mindful that we're oftentimes backing a founder, right? And if we see a great founder attacking a pretty exciting market, like, it gets us excited. And so, everybody's throwing out AI. I mean, we haven't done at least a pure AI deal, but every deck we see, even our own companies in the portfolio all kind of have some AI strategy. It's interesting. I think there's a lot around personalization that can happen, and that's broadly across sports, across health and wellness, gaming. I think AI can help accelerate some of that, right? And it's happening. But we're seeing on the gaming side, and specifically as it relates to sports, I mean, we're seeing a lot of really interesting things, whether it's prediction markets or DFS and other ancillary opportunities around that, I think is fascinating. We just recently made an investment actually in B2B tooling in and around the creator space, which is actually really fascinating. It hasn't been announced yet, so I'll have to hold that one back, but it's automating some certain processes and helping creators with scaling, what they have built online. I'll just kind of leave it at that for now. And so, yeah, so again, but at the end of the day, if we find a great founder in a really interesting and hot market, that's what gets us most excited. We don't really chase trends a lot. We haven't done an NIL deal, for instance, or we didn't do crypto or blockchain back in 2021. And so even AI, right? I think this might be a hot take, but most of the people making money in AI today made those investments 7, 8, 9, 10 years ago. We, again, believe in our approach. We stay true to that approach. There are certain little industries or areas that are of interest, and we'll go out and seek those companies. But at the end of the day, it goes back to the founder. If we don't have the conviction or belief in that, tied with whatever that market is, I think it's not for us. So I know that's kind of a roundabout to your original
No, that's
question.
good.
But yeah, we're more opportunistic, right? And we look at a lot and we see a lot, and we love having those conversations. And when we get excited, we get really excited and lean in.
Yeah, from a international, domestic, you guys stick more North America, US, or where have you landed so far in the portfolio?
Yeah, I would say the majority is North America. We have looked at some opportunities overseas. We have no mandates against investing across the pond. I would say but majority of our investments are in the US. We have now, 1 or 2 in Canada. So we'll say North America broadly, but open to opportunities anywhere.
Now, will you look at the team or league side? Where is your, I guess, thesis or mandates on the sports side? Is it strictly to technology, or do you have some leeway there?
Yeah, no, we certainly have leeway. It's not just technology. We've looked at a variety of the alt teams and leagues. Oftentimes, they can be priced a little outside of our wheelhouse from a pre-seed and seed stage investment, but it's really interesting what's happening there. I'll be curious to see how the alt league approach plays out. We haven't made an investment in one directly. I think it would be interesting as an index to some degree, where you kind of, you look at all of them, and kind of see which ones really start to bubble up to the top. But there's a lot of really interesting product out there on the league side. We have invested we invested in a company called ProShop, which was a new media spin out from the PGA Tour and Vox Media. They do a lot of the production around the PGA Tour, and other golf related entities, TGL, so on and so forth. The Creator Classic, they put that on. And so that's a non-tech example of things we'll do around, leagues and teams, but we haven't made a direct investment inside of one of the alt leagues.
Yeah, the picks and shovels around it makes a ton of sense. What haven't we touched on, Adam? I feel like we could talk all day, but I try to keep these around 25 minutes, just hit the nuts and bolts of the main things. Anything else? Otherwise, we can
I'm curious. You didn't answer my question yet on.
I'm happy to answer that question. Yeah, I try not to take up too much of the mic time, but I mean, you brought it up there. I think the emerging leagues are interesting, but again, is that just a hot trend? Like, what will they look like in 5 to 10 years? how much room is there, right? I do think some succeed, but if you look at volleyball, for example, there's three main leagues that all women's volleyball, they all raised hundreds of millions of dollars. How's that play out, right? You can look the pickleball maybe for an example of how they merged. We'll see there. I think all the money coming in late stage, again, a lot of this we've already talked about at least briefly, but it's very top heavy capital wise in sports. So do they have to come downstream and try to put things together, roll up things? Like, what do they do to hit their mandates, with a lot of them, starting bare minimum 20 million, but a lot of the groups 40, 50 million minimum size checks? What do they do, right? There's only so many opportunities. I think there's a lot of influx of, and this is good and right on your thesis, of talented founders from other industries now seeing sports as this great spot to, go, start to build with all the consumer engagement and fandom, and can you expand it to other industries? And another trend that's sort of on the side of it is this entertainment mix into sports. So you can be with creators, but also a lot of concerts are now built around these things, right? Like taking the NFL halftime show, and it's like, hey, here's the event and then there's a concert after, or here's a concert and then triathlon race, like this mixing of fitness, entertainment, sports. I'd say those are some of four of the main things at least are on my head today as of, the start of May. But
Yeah.
sportainment's fascinating, youth sports, right? Like there's a lot of cool things going on.
Yeah, no, I agree. I mean, the sportainment side is another one. I had a interesting conversation with another investor earlier today about it. But even around professional stadiums, right? You're seeing it here in Atlanta with what Liberty and the Braves did with that new stadium. We have the World Cup coming, and Atlanta is one of the host cities, and what they're building down by an area called the Gulch, what they're building there. I mean, it's really amazing, sort of the mix of real estate and entertainment with professional sports as well is really fascinating. And you're seeing that trend more and more with a lot of these new stadium concepts too. And so again, the question is, what does that drive? Are there other interesting ancillary opportunities for startups, within that ecosystem? That's a really fascinating one. And the sportainment side is certainly a piece of that.
Yeah, I always say, like, I think, and I don't know how this will be done, but if I had billions of dollars and I was going to go deploy, whether, as an LP or a GP, into some sort of thing, is right before a sport event or right after, you're the most like, I just think back when you're a kid and you're watching WWE or you're watching some sort of fighting on TV, then you, and I don't know if you have brothers, but like we'd always be fighting and jumping off the couches, right? You're so engaged. It's the only time I ever cared about it, right? Or you watch tennis and you want to go play. So it's like, if you build these sportainment concepts around the real estate in the stadiums, people can come before. Of course, I'm going to want to hit a bat before I go watch a game. Or, oh, I just watched a guy hit a 450 feet home run. Okay, well now I want to go like see if I can hit a 90 per hour,
Yeah.
fastball. So yeah, I'm curious to see how that plays out, but it's where it's going. And then obviously the casinos and the gambling aspect tied to those. But what a fun time to be, where sports is just, it's always been the center of culture and influence, but to like really now start to be the core pillar to build around is quite exciting.
Yeah. I mean, it really is an exciting time, and it's scary to think we're still in the early phases of this, especially in light of a lot of the recent announcements, billion-dollar funds. I saw Rory and TPG earlier this week, or last week, I guess. I think it'll be interesting where that capital goes, to your point, and hopefully PCV can throw
Yeah.
a few companies their way, and
Yep.
we can all kind of grow this industry together. Because it's, my partner likes to say sports is a living lab, right? You have such an engaged fan base. There's so much opportunity to use or provide those fans with an amazing experience, see how they react, one way, good, bad, otherwise iterate, change, and then provide a better experience. And you're seeing even in the new stadiums that are built, like the technology that's built inside of these new stadiums is just, it's next level, right? And so there are things we're not even thinking about 6, 7, 8 years from now that's going to be integrated into this sport experience that today we
Yeah.
can't imagine, but then we couldn't
Yeah.
imagine living without. So
Right.
I
And I
just
think if you go super, super macro and a little bit futuristic, you also think about, as AI and automation and even robots or humanoids or whatever we're going to end up calling them start taking more work off the plate of humans. Well, there's more that shared experiences that are going to be needed and more attention towards sports. And it's can't be touched from its core IP, right? And so it like creates more of a demand of, oh, okay, well now I don't need to drive anywhere. It's self-driving car. No, I don't need to do the dishes or laundry. It's done. And again, this is thinking who knows how far out, but you see why you can say sports is in the early innings, because you can't really take away that, but you can, a lot of the things that prevent people from going to a sport event or, going to participate themselves, right? Like seeing a lot more. I would never think probably a little bit ago to be in a run club or do a triathlon or do a Spartan race, like all things I've done. And it's like those have become good businesses as well
Yeah.
for like typical sports fans to become participants in different types of sports as well. Adult, Volo sports on the adult rec side has crushed it, of just rolling up adult leagues. It's quite fascinating.
Yeah, it's. I feel like a lot of what we've talked about has been on the professional side, but I think when you get into I'll call them prosumer, right? Whether it's whoop bands to, roll ups around youth sports and adult league, like they're being professionalized to some degree. And I also think consumers are craving that, right? Like the fact that I could have the same exact data as, a professional golfer for a fraction of the cost, like is really interesting, right? There's, that couldn't have happened 20 years ago, but with, to your point, AI, advanced technology, certain thing, like it just creates that ability to see, just go to the driver agency, swing speed or ball speed or any of these things that decades ago were only privy to the professionals. And I think that trickle down effect will continue to be interesting. There'll be a lot of spend going into youth sports. I'm at the early phases of it with my two children. I mean, the early phases, but you're already seeing, our 4.5-year-old is playing basketball every weekend, and you could already see where the spend is coming from, right? When it comes to that, like the expectations once he gets to the next few levels is crazy. And so it'll be really interesting to see where that ends up. NIL has obviously changed a lot for collegiate. It's trickling down in high school, right? Like what happens then, when it gets to, even younger than, middle school. So yeah, that prosumer, that kind of next wave down from the professional levels is really good. I think going to see a big swing from an experience side and, from your weekend warrior and the technology they're leveraging. Yeah.
Yeah, and I want to keep going, but
Yeah.
let's it's been great, Adam. Ton of good insights in this throughout. What's the website, where can people, go check out everything Phoenix Capital Ventures wise, and have a place to reach out or whatever.
Yeah. Need anything, can email me, adam@pcv.fund. The website is just pcv.fund. Check out there. LinkedIn, always super active. So yeah, would love to hear from anybody here.
Love it. We'll get it all linked and keep this sports landscape rolling.
Awesome.